Well, FXCM is an online currency trading company that plans to take advantage of that anticipated growth. The company went public just over a month ago, and Robert Lande is the Chief Financial Officer of FXCM. It's a little bit of a tongue twister. Joining us here live in the studio, you come from way downtown, Old Slip is where you're located, but we had a chance just in the break to speak briefly. Retail investors are getting very involved in the currency markets, and this is sort of a trend that you've seen overseas, but a newer one in the U.S.
Yes, absolutely. Asia and Europe, have been trading on the retail side, have definitely been trading currencies. U.S. institutionally, it's mainstream. I mean, you can see by the size of the market, the $4 trillion a day, that institutions are trading it. But retail, it's new. It's something that's catching on. It's a very direct way of playing macro themes, and macro themes seem to dominate a lot of investing these days.
Now, your company, you started back in 1999. How much growth have you seen in that period of time?
So one study has the overall, the retail segment, which is a small subset of the overall FX market, growing from 10 billion a day to 125 billion a day in that same period. Meanwhile, you have, that's a 37% growth rate year over year over the past decade. You have the overall market growing from 1 trillion to 4 trillion a day. That's, been a 14% growth rate. So the retail segment is definitely a faster growing segment.
It makes up about 10%, I think, is what I was reading of the daily volume in currency trading. What are you seeing amongst retail investors in terms of risk appetite, in terms of the types of trades they're putting on?
Right. Well, the macro themes that you saw last year of weakness in the euro, strength in the dollar, strength in the yen. I mean, retail investors have been playing those, and so you saw month of May was very busy for us. Just May 6th, the day of the flash crash. Normally we do 350,000 trades a day. We did 1 million trades on a day like that, and the retail investors have been playing these big macro themes that are going on. That Southern Europe has been in trouble, Northern Europe growing, but euro as a currency has been having weakness. They've been playing the yen strength, and they've been playing dollar strength.
Now, one of the reasons I think that currency can be very attractive for some traders is that there's a lot of leverage often embedded in these trades. That's changed a little bit with some regulatory changes. How is that making it perhaps less palatable for some retail investors?
Well, still, the overall leverage that's permitted is very high. I mean, in the United States, they brought down leverage limits now to 50 to 1 on major pairs. In Hong Kong, it's 20 to 1. But these are still relatively high limits for you to make a leverage bet if you want to do so. We'll see the overall impact of what this has. We've kind of come full circle the past few years with a lot of regulatory change. What's ended up happening is a lot of our competitors, the smaller, and medium-sized ones, have been closing up shop. The regulators have been increasing capital requirements. They've been decreasing leverage, and all of that is leading, I think, to the maturing of this industry and having fewer players in the retail FX space.
Now, why go public when you did?
Well, we didn't need the money, but we really thought that going public, publishing 10Ks, Qs, analyst calls, would really add to our credibility with our client base, and that they could see, we were always, as a private company, trying to be transparent, published our financials, but it's a whole different kettle of fish trading on the New York Stock Exchange and seeing a 10K, seeing $1 billion market cap. We think all of that would add to credibility with our customers, which will either want to trade with us more, leave more money with us, and that was really the main purpose. A secondary purpose is, as I mentioned to you, regulators raising the bar around the world is resulting in competitors being strained, and I think there's a lot of opportunity to acquire and consolidate the industry further, a little bit like what happened with the e-brokers, over the past 10 years.
E-trade. Let's talk a little bit about where you expect to see growth. We have about 30 seconds. I know Asia represents the majority of your trades, but the U.S. is gaining, as you mentioned earlier.
Yes. So U.S. as a country country is still our largest country. 24% of our volume comes from the U.S. China's our next biggest. 12% comes from China. South Korea is the next biggest. There isn't a geographic area where, more growth is going on. I mean, this is a secular trend that's going on globally. For us as a company, though, we've been traditionally weak in Europe. We've been number one in Asia, number one in the United States. And so Europe, we acquired a company in October, the number 3 player in the UK. We think that, Europe will provide an interesting opportunity for us to grow there where we've been traditionally weak.
All right, Robert, thank you so much for joining us here in the studio live. This is Robert Lande, CFO of FXCM.